And good afternoon. Welcome into Market Talk for Friday, April 16th, 2021. Great to have you here with us as we wrap up another week. I'm your host, Jesse Allen. Find us online, markettalkag.com. You can find us there, all of our social media links, Facebook, Twitter, Instagram, all of our streaming sources, our YouTube channel, our radio affiliates, everything, one-stop shop. It's all online, markettalkag.com. Happy to bring on our good friend here this Friday afternoon, Mike Pearson, joining us for this episode of Market Talk. And Mike, good afternoon. It's great to catch up with you, my friend.
Good to hear from you too, Jesse. Things are moving. I tell you what, it's an exciting time to be in agriculture.
It is a very exciting time to be in agriculture. Not only are things moving on the commodity markets, but things are moving in the fields as well. I mean, just look at where you're at. I've been hearing reports all across the country. A lot of folks getting into the fields here early and getting some planting done for spring 2021.
Yeah, I've heard a lot of the same, but I will tell you, Jesse, I was talking with a couple growers this past week, a few in South Dakota and a few in north central Iowa, and across the board, they all said this cold snap that we're getting started last weekend and kind of has stretched through this week. All the guys I spoke with said that was slowing down their planting intentions. They were going to wait and see for this thing to pass by. Most of them had other work they could work on as well. And they figured, why slam seeds in if it's going to warm up here in 5 or 6 days? We'll just put a pause on. So I'm not expecting a lot of huge shifts to the upside in Monday's crop progress report. But yeah, I mean, as you saw here on this last one, 1% Iowa corn's already in the ground. Beans we'll find out on Monday how beans are looking. But yeah, growers are running. And you get down to Texas and, oh, buddy, they are running hard down there and across southern Missouri and southern Indiana and Illinois, of course, Kentucky, all those places. Those growers are rocking and rolling.
They are, and you think about it, we look at the USDA reports that have come out here the last couple of weeks, and the lower acreage numbers for quarter beans really sent a shockwave into this market, and we look at how tight our margins are here in the U.S., we really need to produce a strong crop this year in order to keep our supplies up, especially on the soybean side. And there's a lot of factors going into the market trade right now, and you alluded to weather, and I think that's a good place for us to start. And there's a lot of different weather concerns playing in the market, not only here in the U.S. with drought in the northern plains, but up into Canada as well with the drought there in the prairies, and even South America, Brazil, safrinha corn crop, drought issues there, or weather issues there, I should say. When you look at all these weather factors and how that's playing into the market, what are you hearing from folks, as to how much the weather is really driving these markets right now?
So it's a factor. It certainly is. When I'm talking to analysts and to brokers right now, everybody's getting geared up for this summer. And as of right now, Jesse, you and I'm sure all your viewers and listeners know as well, we don't know what's coming, right? We're starting to get some of these longer range forecasts that can help shed some light on it. But the way the system is set up right now with this really persistent and severe drought that stretches, you look at the drought monitor, it's effectively a massive fat C that stretches from Texas all the way across the southwestern United States. You talk to cattle ranchers in New Mexico and in Arizona and parts of Colorado, it is bone dry. I mean, their pasture conditions are really looking tough. Folks are making decisions on whether or not to sell pairs. And this drought stretches then all the way through California. Was talking to Chad Colby, who's our technology expert on This Week in Agribusiness. He's out in California this week. And as of now, a full 1/4 of all California's crop acres aren't going to receive their full water allotment this year. That much we know for sure. And it's probably only going to tighten down unless some significant weather systems move into California. And this time of year, that's just not super likely. That drought then stretches through the Pacific Northwest and then across the high plains. And as you mentioned, up into Canada. North Dakota, the entire state is abnormally dry or worse, with a majority of it now in some of the worst stages of drought on the drought monitor. Again, was talking to some folks on Twitter, North Dakota growers, cow-calf producers out in the western part of the state. They're making that decision. Do we cull pairs right now as a way to free up some competition for this grass, as a way to, I shouldn't say free up some competition, reduce competition for this grass out in that part of the state, in that part of the world, rather. And this is impacting not just cow-calf producers. This is impacting anybody who's going to be planting a crop out there. In particular, Jesse, I'm sure you've been talking about it with a lot of your guests. This spring wheat crop, Minneapolis wheat, is interesting. Every acre of Minneapolis wheat effectively this year is going to be planted in a drought scenario, and we're looking at fewer acres to begin with. So there could be a lot of excitement as this summer rolls through if the drought should intensify. Now, that being said, we do have a fairly large storm system working its way through the center of the United States right now. I know parts of western Kansas are getting some snow here on this Friday. Western Nebraska got some snow, definitely needed in those places. But I believe the system's going to break down before it moves too much farther east. So subsoil moisture is a concern. The trade's not watching it too closely as of yet, but when the focus does turn to weather, Jesse, things could get exciting.
Very, very true. And staying on that spring wheat crop here a little bit, and wheat in general, all three wheats, Chicago, KC, Minneapolis. You look at the drought conditions in the northern plains. We look at the cold weather possibilities for that winter wheat crop, and looking at the trade today, seems like traders taking a few profits here, which especially in that Minneapolis wheat side. We've run this price up quite a bit with the drought concerns. So, it almost seems like we were bound to have a little consolidation here at some point, and it looks that way as we wrap up the week.
It does. It does. It looks that way in spring wheat. Certainly would appear to be the case as we look at the corn market. Yeah, I think you're exactly right. We're in rarefied air right now, pretty well across the board with cattle. Let me think. Kind of is the only exception. Everything else, we're seeing just a massive flux of money into the commodity space. It's being driven, I think, in a large part by fundamentals. We've been talking about the demand for corn and soybeans. We've been talking about the Chinese demand for protein. All of these things have put incredible demand stress on an industry, particularly the logistics side of the industry, that is still struggling with COVID. So even though we've got a ton of international demand, it is still kind of a struggle to get everything loaded, perhaps less of a trouble in the United States than it is down in Brazil, or will be, as coronavirus continues to spread down there. But as we get up to these levels, when we're talking price levels we haven't seen since the drought-induced price spike of the early 2010s, we're going to find people looking for reasons to back out, take their profits, and get a better read on what's going on. I do anticipate for folks, we're probably going to see fairly, I don't want to say stable pricing, because it's going to be volatile. This volatility that we're seeing is going to impact every market. We're seeing it in equities, we're seeing it in crude oil, we're seeing it in lumber, we're seeing it in corn, seeing it in soybeans, seeing it in lean hogs, again, not really in cattle. But it's coming everywhere else. And this is driven by the true story, the fundamentals that exist out there in the world right now. But I believe we've also got a little bit of nitrous gas added to these markets right now in terms of monetary policy and fiscal policy. We have printed a pile of dollar bills and a pile of euros and a pile of Chinese currency and a pile of Brazilian reais. And we've printed all of this money globally over the past year. And that money's got to find a place. And it's increasingly finding its place in asset ownership, which agriculture, that means the futures. And I don't think we're seeing a whole lot of retail level investors. Your crazy aunt isn't putting her $1,400 stimulus check into D's corn, but it's freeing up a lot of excess capital from the larger players who are now free to exploit markets that are moving more quickly. And that's where the commodities influx is coming from, in my mind, Jesse. And I think that's going to cause us to see lots of volatility, but not huge price swings, or I should say, no real changes in trend until we get through planting. I think we're going to find some stability up at these levels. I think as we're taking a look at the corn market, that $5.50 to $6 level for old crop seems to be realistic. I know May hit $6, and I know that was exciting this past week. I'm not sure that the fundamentals justify a 6 handle on corn quite yet. But if this drought persists, or if it gets real rainy and corn's not going in on time, we'll definitely see corn move back to have a 6 in front of it. But in the meantime, I think we're going to be relatively stable in here going forward until we get a better handle on how many acres are going in the ground.
Yeah. Well, and another thing too, watching that Brazilian crop to see if there's any problems in the safrinha crop, second crop corn there, that could play in as well. And, looking at this corn market, multi-year highs Thursday, we kind of pulled back a little bit today. But overall, corn market is staying fairly strong here as we wrap up the week. And, you talk to a lot of producers, whether it's corn, soybeans, wheat, whatever the case is, you mentioned that a lot of folks probably finding some profit here. If they haven't yet, I would just think they're crazy at this point. we always hear the adage of, sometimes a farmer is like, oh, well, it hit 550. I'm going to see if it goes to 6, that
Yeah.
kind of thing. When you're talking to producers right now, what are you hearing from them? Are they kind of showing their hand? Or are they saying, yeah, I finally moved some old crop corn and got out, or hey, I made some new crop sales or for corn or beans or whatever? What are you hearing when you talk to producers right now?
Jesse, that's a great question. And I've been asking that question to nearly every producer that I've talked with, because this is a different year. This is unique. And the most common response I hear from producers is, I sold out old crop beans way too quickly at the start of this rally last year, and I unloaded corn a little too quickly. Most of the folks I've talked to were pretty well depleting their old crop corn on farm storage by February. That was kind of, and this is all anecdotal, but these are just the guys I have talked to. That's what they mentioned. They were scaling up sales as the market rallied. And by the time we got to Feb, we were out of old stuff to sell. And these particular growers hadn't re-owned in any way. So they're out of the market on old crop. That stings. And this has been researched a lot. It hurts a lot more when you did own something that is now worth a lot more than if you didn't own anything at all, right? The idea of a lost profit is much harder for people to bear psychologically than just losing money. Everybody else lost money. That's just the way of the world. But neighbor Bill's selling $6 May corn. I sold out at 408. Now I'm frustrated and I'm upset. That's the psychological hurdle that growers are negotiating on this new crop, because really we are a tinderbox right now in all the ag markets, but particularly corn and soybeans, where we're seeing these demand drivers be the strongest. Beans, old crop beans at $15. Is that a great deal? Or is that a great price for most growers? Yeah, that's profitable. They can definitely make the sale. But those same growers, Jesse, are a lot more profitable at $18 beans, right? And how do you manage it? And right now, I have not found anybody who has been thrilled with their marketing plan heading into this new crop. Everybody has, coulda, woulda, shouldas with this crop, with their marketing so far. But I do think that the guys who are going to be successful as we roll through the end of this 2021 calendar year, the guys that are successful are the guys who are settling for, I don't want to call them base hits. I mean, these are doubles and triples we're hitting here at these price levels, but they're not necessarily home runs. And I think folks just have to make peace with the fact that we're going to be selling into an uncertain market. I do think there's still opportunity if folks are looking to re-own on the board, but that opportunity is dwindling. As you know, the value of calls and puts, of options on the futures market have been skyrocketing. Folks, the price of those tools climb along with volatility. So when we're in a really volatile environment, when prices are moving quickly, we see options values increase substantially. And that's certainly what happens. So before I advise anybody to look at reownership, I always say work with your broker and make sure your broker knows really what your break even is, so you can understand how you want to work these things into your marketing plan. I do think this is the year to do it. At least take a flyer on a couple of calls on some of the new crop corn and soybeans and probably wheat that you're getting sold. But remember, options that aren't managed tend to expire worthless. So if you're willing to take on options and if you're willing to re-own, I think you're probably going to see some payback this year. Odds are pretty good that we're going to get some kind of a weather scare, just given the drought scenario that we've got shaping up across the country. But don't plan on getting rich with them, Jesse, I think would be my advice.
And that's great advice. I love how you summarize that, Mike. Looking at things too, as much as it does sting when you lose profit, still looking at, $4 corn sales that were made, or even close to 5, or you're looking at new crop sales here close to 5. We got to remember that's still better than last year.
Oh, it's better than every year going back to 2015, maybe 2016 for nearly every grower. Jesse, this is the time for farmers to make money. We all know we are in a commodity business. If we're producing stuff that we're going to sell on the Chicago Board of Trade, we're growing commodities. We're not differentiating our product in any specific way. We are selling commodities. And in the commodity cycle, Dr. Chad Hart at Iowa State University told this to me, it's probably been 15 years ago now, and it has stuck in my head. Jesse, over a long enough time frame, do you know what the average profitability is for a commodity producer? I didn't know this.
I I would hate to take a guess, so why don't you educate me, Mike?
It's zero. Over a long enough time frame, the world of commodity production is such that price always responds to meet supply and demand eventually. So what that tells us is if our profit is historically zero, how in the world are these farms around for 5, 6, 7 generations? Because when they capture those inefficiencies when the market provides it. And right now, we are in that period where the market is affording substantial profit to producers who are willing to make that sale. Now, the corollary to on average, everybody's worth zero means we're going to have massive profitability for right now. In the future, we are going to have losses to counteract that profitability. So I do think folks need to be aggressive. I do think we just have to swallow the fact that you're not going to hit the high this year. If you hit the high this year on making some sales, guys, it was luck. Nobody knows where this thing is going to top out. I don't care who you are, the smartest person in the world. Nobody knows where this thing's going to top out, especially in a market that's as weird and as volatile as the one we're in. If you had, in January 2020, before COVID, before all the stimulus, if you had pulled a true stock market expert out and you said, hey, in 18 months or 14 months, GameStop is going to be worth $450. They would have punched you in the face because GameStop was worth $3 at the time. These are weird times in the markets, and weird times mean volatility, and weird times means it's really difficult to predict where things are going. So bite the bullet, figure, hey, I'm not going to sell the high, but I want to sell in here at elevated prices, bring some of this profit back to my farm. This is the year to do it. Get those sales on the books. Don't be terribly aggressive at the start of this year. But if this dryness starts to spread, Jesse, I really want to see guys be aggressive on 2021, on 2022, particularly corn and soybean sales. And I would really start crunching numbers on your 2023 corn and soybean crop as well. Because the other thing we know about commodity production, prices are going to rally. What's going to happen to all of our input costs? They're going to climb right up with it. And we know that when those commodity prices turn down, they're going to turn down fast, while input prices are going to come down much more slowly. So let's lock in these high prices for as long as we can, Jesse.
Mike, I'll switch our topic to livestock here real quick. And I know you're a cattle guy. I want to give us enough time for cattle. Briefly on the hogs, we started to see some weakness come in here, some corrections. We were limit down Thursday. We're down again here on Friday. Do you think we put a top in this hog market real briefly?
That's a great question, Jesse. And I'm going to ask that question of Naomi Bloom and Dan Huber here in just about 20 minutes. I don't have a good answer. I do think we have hit a medium-term top for sure. I think we are going to have to wait and see what comes out of China. They announced earlier today that their pig crop was 32% ahead of where their pig crop was first quarter 2020. So the world thinks they're getting their hog industry back. Time will tell. If they're not, if they're lying, which the Chinese government does, then we could certainly see this thing move higher into the summer months as their demand continues to accelerate.
All right, let's switch our topic to cattle. I know you're a cattle guy and you alluded to it as well. This cattle market has been tough to watch here. Now, we started to kind of break out. We started to get higher cash prices, and now all of a sudden we're kind of faltering here as we get into this week, and it's been pretty disappointing to watch. What are your thoughts on this cattle market, Mike?
It's very disappointing to watch. It's really frustrating to have cash cattle sit at 114 for 3-4 weeks for a lot of guys while the futures market is rallying, and then to finally have cash break and start to move up and start trading at 117, 118, 120, 121. I think the highest sale I've heard is 122 looking at last week. And now we've got the futures breaking hard. Now, a conspiracy theorist might say, well, packers are coming in, they're selling the board hard, and they're driving the futures price down. I don't know. But I do think we are going to have to wait until this summer. The good news for cattle producers, in my mind, as we look out to the future, is we do have some kind of inflationary event going on. We've got consumers with more money. Once those consumers are free to go to restaurants and they're free to spend $60 on a steak, Jesse, I think this is going to come back to benefit the cattle industry long term. I'm not terribly excited about locking in prices here over the summer on cattle. We just haven't had a strong basis opportunity. It hasn't really made sense to do it. But I am aware that waiting is risky. And what we're waiting, we're betting on the come in the cattle market, which is kind of how we roll. And we're betting that people are going to move out, start grilling, start traveling more, vacationing, eating more, and all of that's going to create a compelling story in the beef market. Time will tell, but that's where my bias is right now today.
Well, always great insight, Mike. I appreciate the time as always. I know folks can see on This Week in Agribusiness alongside Max Armstrong, and
You bet.
also, give a plug. I know you got the new show on Fridays with feedstuffs.com, even though technically competition to me, but I want you to give a plug anyway.
At the end of the day, Jesse, we're all trying to help growers make more money, because
Yes,
if farmers are making money, then they pay us and we make money. It's a win-win-win. So yeah, check out feedstuffs.com Friday afternoon at 2 p.m. I do a roundtable discussion show with analysts, and it's 30 minutes long, and it's like talking to Jesse. It's just us sharing our thoughts and let you get behind the scenes at what brokers are thinking. So it's feedstuffs.com Fridays at 2 p.m. It's called The Locker Room. Thanks, Jesse.
Yeah, you bet, Mike. You can check out Market Talk and then flip over and check out The Locker Room on feedstuffs.com. Mike, I appreciate catching up with you as always. Have a great weekend. We'll talk to you again soon.
Likewise, Jesse. Take care.
Mike Pearson joining us here today on Market Talk for Friday, April 16th. That's going to do it. Have a great weekend. I'm Jesse Allen. We'll talk to you on Monday.